I'm going to specifically talk about the travel rule, and as you mentioned, the travel rule is already in place in Switzerland since quite some time. So I'm also going to talk about what were the effects of the travel rule, and I will consider them a bit different than the regulator might have intended to, at least for now. So first of all, I just want to talk quickly about how Bitcoin works when you transfer from a VASP, which is a virtual asset service provider, just a different word for an exchange, bank, or broker. It's transacting to another VASP, so meaning from one place you're withdrawing to the other place you're depositing Bitcoin, and then from one VASP doesn't know who is transacting to the other VASP. So in the middle there's like the black box is the Bitcoin network. Using chain analysis, they can tell, okay, these coins are now coming from VASP A. VASP B can see that, and VASP A will later on know that this is going to VASP B, but they're not exchanging the information about who particularly is sending to whom. Like in the banking world, when you do at least in Europe, you do a SEPA transaction, you have to add your name and address, so both banks know who is sending to who. This is not part of a traditional transaction when you're sending from one VASP to another VASP. Now, the next case, which is a bit more unique to the crypto case, is when you withdraw from a VASP, from an exchange, to your own non-custodial wallet, meaning a wallet where you own the private keys. It's often also called now, from the FATF, they call it the unhosted wallet, or also a private wallet. So there again, the VASP does not particularly know that he is sending to a non-custodial wallet. He can assume so based on the result from chain analysis, but he cannot be 100% certain until later in time. So the Bitcoin blockchain is always some kind of black box. And then the third case is when you deposit Bitcoin from your non-custodial wallet again to a VASP. All in these cases, they have in common that doesn't matter which transaction they do, one VASP does not know if it's transaction with a counterparty VASP. Sometimes they know immediately, sometimes they don't, depending on the chain analysis or whatever provider you're using, but they for sure don't know like who's the recipient and the sender of that transaction. And this is what the travel rule actually is all about. They just want to have the same in crypto as we have in fiat right now, meaning when you're sending from VASP A to VASP B, both VASP have to know who is sending to whom, so you can do all the traditional AML checks that you do on the fiat side, also on the crypto side. Now, what is, so this is that case that I just described with the travel rule information, then going from A to B. Now, the challenge here is you actually have to know who you're interacting with. If you're sending to another VASP, you have to exchange the travel rule information. But if you're sending to a non-custodial wallet, being a wallet that is either owned by the customer itself or actually somebody else's wallet, then you can't and you're not supposed to exchange travel rule information. So, and the problem with this is, if you, as a VASP in Switzerland right now, have to exchange with Binance, because on the other side, even if on the other side there's Binance sitting, because chain analysis told you there's Binance on the other side, this address, you cannot actually in an automated way do a travel rule information exchange, because Binance or any other big VASP, they do not have a travel rule protocol solution in place. That's one problem. And the other problem is, of course, there are more than 1,200 VASPs all around the world. And now, in the perfect world, they would all agree and say, okay, of course, this information is not on the Bitcoin protocol or on any other virtual asset, crypto asset. It's not part of the blockchain itself. So we have to exchange them on another layer, and everybody's going to agree, okay, we have to exchange it in this way, in this technical standard. Now, as always with standards, they need some time to evolve. There's no currently one standard, but there's several competing open standards on how to exchange this information. Maybe you've heard of some. Is in Switzerland, OpenVASP is fairly prominent. Then there's TRP, which is a travel rule protocol. There is TRISA in the US. There's also the Travel Rule Working Group in the US, or US Travel Rule Working Group. there's a Shift, and there's different players. And of course, as a WASP, if you have to implement all of them, and you need to know what protocol is your counterparties are speaking, it's getting quite complicated. And this is also what we learned actually from Switzerland now. As I said, since 2019 already, for the banks that are directly FINMA regulated and dealing with crypto assets, the travel rule is already in place. Now we also, like Japan, have self-regulated organizations, and in Switzerland, all the smaller WASP, or nearly all of them, are part of VASP. And VASP, as a self-regulated organization, has a travel rule in place since January this year. But so in theory, all of them could exchange or would have to exchange travel rule information between each other. But the problem is 90% of the traffic from a Swiss WASP does not go to another Swiss WASP, but goes to one of the big exchanges. And if your exchange does not implement the travel rule, you cannot actually do it on your side either. So this resulted in all the WASPs more or less deactivating WASPs to WASP transfers. So the only thing you can do if you're a customer at a Swiss WASP, you can only withdraw to your own non-custodial wallet. You cannot send from a Swiss WASP to a Bitfinex or a Binance directly anymore. And to make sure that you are actually only withdrawing to your own non-custodial wallet, the regulator asks the WASPs to ask their customer again to provide proof that they actually control this address. This is what we call the address ownership proof. And how do you ask for this proof? Well, you have to, there are 3 ways that currently are approved by the FINMA. One is you ask the user to take a screenshot of your wallet. I mean, this is not very secure. Obviously, it doesn't scale. It's very manual. The other one is you do an on-chain transaction. You have to do like a ping pong between you and the WASP wallets. It's also rather a hustle. It costs, of course, again, transaction fees and so on. It doesn't really scale well. And the third approach is using digital signatures, which is by far the best way from a technical perspective, but also a bit more challenging since most wallets don't support it out of the box. But yeah, these are the learnings from Switzerland that we see now. We are one of the first that implemented the travel rule, and it gave us as a country a clear disadvantage over other WASPs. For example, there are now WASPs that coming from Austria wanting to get into the Swiss market, doing a lot of advertising in Switzerland. They don't have to follow the travel rule. So they don't have this restriction that you see here that you're not allowed to send from them to another WASP anymore. So it's kind of course, we are ahead with regulation, which makes FATF happy. We maybe have also less cases when it comes to money laundering and so on using crypto assets. But the unintentional side effect is that we have disadvantage over other